the official, Crypto and DeFi, Pocket Guide, 2024, by Roni Everleaf. Intercontinental Digital Matrix Publishing. Copyright C. 23. The official, Crypto and DeFi, Pocket Guide, 2024. Note to reader. Dear reader, as you turn the pages of this guide and absorb the knowledge within, it's important for us to share a crucial disclaimer that colors the way this information should be approached and applied. While this guide is comprehensive in scope, covering various aspects of cryptocurrency and decentralized finance, DeFi, it is imperative to understand that the content contained herein is not intended to be financial advice. This book is designed to educate, inform, and inspire by providing an overview of the crypto and DeFi landscape, introducing concepts, explaining mechanisms, and discussing trends. The field of cryptocurrency and DeFi is dynamic, characterized by rapid changes and significant volatility. It is an area of innovation and risk, where the very nature of value and financial interaction is being redefined and recreated. Such an environment demands cautious navigation, informed decision-making, and, above all, personal accountability. We urge you as the reader to utilize this guide as a foundation for your own research and exploration. The cryptographic ventures and DeFi projects elaborated upon within these pages should be starting points for a journey of personal due diligence. Every decision, investment, or involvement in the crypto and DeFi space should be made with a comprehensive understanding of the risks involved, and ideally, after seeking professional financial advice that is specific to your circumstances. The intention of this book is to empower you with knowledge, but it should in no way replace your own critical analysis or the expertise of financial advisors, particularly when it comes to investment decisions or engaging with financial instruments. Cryptocurrency investments can be highly speculative, and the markets can be significantly more unpredictable than traditional financial markets. Remember that your financial well-being is paramount, and while we hope this guide enlightens and assists you on your journey through the evolving world of digital finance, your choices and actions remain your responsibility. Stay educated, remain vigilant, and invest not just your funds, but also your intellect into any financial venture. Thank you for your attentive consideration, and may your exploration of crypto and DeFi be enlightening and prudent. Please regard this note as a friendly but serious reminder of the importance of engaging with financial content responsibly and with awareness of its non-advisory nature. The author assumes no liability for the reader's financial decisions. Readers retain full responsibility for all outcomes resulting from their actions. This guide is provided as is. Contents of this guide. Chapter 1. Understanding Blockchain and its Impact. 12. 1.1. The Concept of Decentralization. 15. 1.2. How Blockchain Works. A Technical Perspective. 16. 1.3 Types of Blockchains. Public, private, and consortium. 16. 1.4. Smart contracts and their role in DeFi. 17. 1.5. Blockchain security, cryptography, consensus mechanisms, and hash functions. 18. 1.6 Case studies, impact of blockchain on various sectors. 19. Chapter 2. Cryptocurrency Deep Dive. 20. 2.1. Bitcoin, the first cryptocurrency. 20. 2.1. Altcoins, variety and purpose. 21. 2.3. Tokens versus coins, understanding the difference. 22. 2.4. Cryptocurrency, wallets, types, and security. 22. 2.5. Crypto exchanges, centralized and decentralized platforms. 23. 2.6. Initial coin offerings, ICOs, and token sales. 24. Chapter 3. The World of DeFi. 25. 3.1. DeFi versus traditional finance. 26. 3.2. Key components of DeFi. 27. 3.3. Understanding DeFi Protocols. 27. 3.4. Yield Farming and Liquidity Mining. 28. 3.5. DeFi Lending and Borrowing. 29. 3.6. Decentralized Exchanges, DEXs. 29. 3.7. DeFi Insurance and Risk Management. 30. Chapter 4. Cryptocurrency Investing and Trading. 31. 4.1. Fundamentals of Cryptocurrency Investing. 31. 4.2. Analyzing Cryptocurrency Markets. 32. 4.3. Trading Strategies for Cryptocurrencies. 33. 4.4. Risk Management in Crypto Trading. 33. 4.5. Tax Implications and Regulations. 34. 4.6. Building and Managing a Crypto Portfolio. 35. Chapter 5. Legal and Regulatory Environment. 36. 5.1. Regulatory Landscape for Cryptocurrencies and DeFi. 36. 5.2. Anti-Money Laundering, AML, and Know Your Customer, KYC. Regulations. 37. 5.3. Compliance and Legal Challenges in DeFi. 38. 5.4. Global Regulatory Perspectives and Developments. 39. 5.5. Advocacy and Lobbying for Cryptocurrency Adoption. 39. Chapter 6. Risks and Challenges in Cryptocurrency and DeFi. 41. 6.1. Security. Risks and Precautions. 41. 6.2. Smart Contract Vulnerabilities. 42. 6.3. Market Volatility and Speculative Trading. 42. 6.4. Scalability Issues and Network Congestion. 6.5. Ethical and Social Implications of Cryptocurrencies. 44. Chapter 7. Emerging Trends and Future of Cryptocurrency and DeFi. 45. 7.1. Advances in Blockchain Technology. 45. 7.2. The Growth of Non-Fungible Tokens, NFTs. 46. 7.3. Integration of DeFi with Traditional Finance. 47. 7.4. Central Bank Digital Currencies, CBDCs. 48. 7.5. Predictions and Forecasts for the Next Decade. 49. Chapter 8. Practical Guide to Getting Started with Cryptocurrency and DeFi. 50. 81. Setting up a cryptocurrency wallet. 50. 8.2. Safely buying and storing cryptocurrencies. 51. 8.3. Using DeFi platforms. A step-by-step approach. 52. 8.4. Understanding and interacting with smart contracts. 53. 8.5. Participating in DAOs, Decentralized Autonomous Organizations. 54. Chapter 9. Building a Career in Cryptocurrency and DeFi. 55. 9.1. Career Paths and Opportunities. 55. 9.2. Skills and Education Required for a Career in DeFi. 57. 9.3. Networking and Community Involvement. 58. 9.4. Starting your own project or business in the crypto space. 58. 9.5. Case Studies of Successful Careers and Enterprises in DeFi. 59. Chapter 10. Conclusion. 61. 10.1. Recap of Key Points. Covered in the book. 61. 10.2. The Potential and Limitations of Cryptocurrencies and DeFi. 64. 10.3. Final Thoughts on the Future of Digital Finance. 65. 10.4. Call to Action for Readers and Industry Participants. 66. Chapter 11. Appendices. 68. 11.1. Glossary of Cryptocurrency and DeFi Terms. 68. 11.1. Resource Directory for Further Learning. 70. 11.2. List of influential people and projects in the cryptocurrency space. 71. Chapter 12. References. 74. 12.1. Academic Articles and White Papers. 74. 12.1. Books and Educational Material. 75. 12.2 Websites, blogs, and online forums. 76. 12.4 Government and regulatory publications. 77. Preface. Welcome to the precipice of the digital financial revolution. In the pages that follow, you will embark on a journey through the intricate and fascinating world of cryptocurrency and decentralized finance, commonly known as DeFi. This guide is crafted to illuminate the pathways that lead through the complex fabric of digital money, smart contracts, and unprecedented financial autonomy. Whether you are a seasoned investor, a curious beginner, or an expert in finance seeking to expand your horizons, this book will serve as your compass and map. It is designed to demystify the intricacies of the blockchain, provide clear explanations of cryptocurrency mechanisms, and offer you the insights necessary to navigate the DeFi space with confidence and security. The financial landscape is shifting under our feet with a swiftness that can leave even the most agile among us searching for solid ground. Traditional financial systems have long been the uncontested pillars of our economic exchanges, but the advent of blockchain technology has opened the gates to a new world where the rules are written by the ledger of the people, a decentralized and transparent system where trust is baked into the technology itself. As this book unfolds, you will learn the foundational elements of cryptocurrencies, the blockchain technology that provides the backbone of these digital assets, the cryptographic techniques ensuring security and privacy, and the economic principles driving their volatile yet captivating markets. You will discover how to acquire, store, and manage cryptocurrencies, how to assess their value, and how to avoid the common pitfalls that beset many newcomers to this digital realm. Beyond mere theory and basic transactions, we will delve into the heart of DeFi, a universe where financial products are recreated on blockchain platforms, cutting out the middleman and giving users control like never before. From lending and borrowing platforms to decentralized exchanges and yield farming, DeFi is not just a niche interest, but a promising, rapidly expanding ecosystem that defies conventional financial logic and opens up a galaxy of opportunity. This guide is not only about conveying information, it is about instilling a mindset. Here, you will learn not merely to participate, but to innovate, to anticipate trends and technologies that might reshape our world. It is my aim to equip you with the knowledge to contribute meaningfully to discussions, investment decisions, and perhaps even the evolution of DeFi itself. I invite you now to turn the page and enter a realm of possibility where you are empowered to be a part of finance's most significant transformation. Let us set forth on this journey with an open mind and the willingness to embrace the future of money. Welcome to the world of crypto and DeFi. Chapter 1. Understanding Blockchain and its Impact. 1.1 The Concept of Decentralization. In the realm of digital innovation, decentralization stands as a foundational pillar that has given rise to the disruptive force known as blockchain technology. Decentralization, in its essence, refers to the distribution of power away from a central authority. This paradigm shift is particularly significant because it enables a level of transparency, security, and autonomy previously unattainable in centralized systems. The decentralized model is built on the premise that no single entity holds control over the entire network, allowing for a democratic and equitable distribution of power among its participants. The impact of decentralization is profound. It allows for systems where trust is built not on promises or regulation, but on cryptographic proof and collective verification. In a decentralized blockchain network, every transaction is transparently recorded on a ledger that is maintained by a network of nodes, rather than a singular, potentially fallible institution. This not only reduces the risk of fraud and corruption, but also democratizes access to information and eliminates single points of failure, making systems more resilient to attacks and operational risks. 1.2. How blockchain works. A technical perspective. Blockchain is often associated with cryptocurrencies like Bitcoin, but the technology extends far beyond just enabling digital currencies. At its core, a blockchain is a distributed database that maintains a continuously growing list of records, called blocks, which are linked and secured using cryptography. Each block contains a cryptographic hash of the previous block, a timestamp, and transaction data. When a transaction occurs, it is broadcast to a network of nodes, which then use algorithms to validate the transaction. Once a transaction is confirmed, it is grouped with other transactions to create a new block for the ledger. This block is then added to the existing blockchain in a way that is permanent and unalterable. This process is known as mining in some blockchain networks and requires significant computational power to ensure the security and integrity of the transaction ledger. 1.3 types of blockchains: public, private, and consortium. There are three primary types of blockchain networks: public, private, and consortium. Public blockchains, such as Bitcoin and Ethereum, are open and allow anyone to participate in the network, be it to validate transactions, mine blocks, or simply view the ledger. Private blockchains, on the other hand, restrict access to a specific group of users. They are often used by organizations that require the benefits of blockchain but need to keep their transaction data confidential. Consortium blockchains are a hybrid model where multiple organizations come together to participate in the network. Unlike a private blockchain, a consortium is governed by a group rather than a single entity, providing a balance between the high-trust environment of private blockchains and the security and transparency of public blockchains. 1.4 Smart contracts and their role in DeFi. Smart contracts are self-executing contracts with the terms of the agreement directly written into code. They run on the blockchain and automatically enforce and execute the terms of a contract when predetermined conditions are met. This technology is central to the concept of decentralized finance, DeFi, which aims to create a financial system that is open to everyone and minimizes the need for trusted intermediaries. In DeFi, smart contracts replace the traditional financial services functions, such as lending, borrowing, and trading, with decentralized protocols. They can be used to create decentralized exchanges, DEXs, lending platforms, and even stablecoins, cryptocurrencies designed to minimize volatility. 1.5 Blockchain security, cryptography, consensus mechanisms, and hash functions. Blockchain security employs a combination of cryptographic techniques, consensus mechanisms, and hash functions to safeguard the network. Cryptography ensures secure communication in the presence of malicious third parties. Consensus mechanisms, such as proof of work, POW, or proof of stake, POS, provide a way for the network to agree on the state of the blockchain and on which transactions are valid. Hash functions, meanwhile, help to secure the blockchain by creating a unique digital fingerprint for each block. Each of these components plays a crucial role in maintaining the integrity of the blockchain. Cryptography prevents unauthorized access to the network's data. Consensus mechanisms ensure that all participants agree on a single source of truth, and hash functions maintain the unbreakable link between blocks in the chain. 1.6 Case studies: impact of blockchain on various sectors. Blockchain technology has had a significant impact on various sectors, demonstrating its versatility and potential for widespread adoption. In the financial sector, blockchain has introduced new ways of handling cross-border payments, reducing transaction times from days to mere seconds. Supply chain management has seen improved traceability and efficiency, with blockchain enabling transparent tracking of products from manufacture to delivery. In the field of healthcare, blockchain-based systems are being explored for secure patient data storage and management, ensuring privacy and easy access to medical records. Furthermore, in the realm of intellectual property and copyrights, blockchain is used to establish and verify ownership rights in a digital world where duplication is easy. The impact of blockchain continues to grow as more industries recognize its potential to solve long-standing challenges, from voting systems that ensure integrity and transparency to energy grids that optimize and distribute power more effectively. In conclusion, blockchain technology, with its inherent traits of decentralization, immutability, and transparency, is not just a cornerstone for cryptocurrencies like Bitcoin, but a revolutionary force with the potential to reshape industries and redefine how we perceive trust and security in a digital age. The chapters that follow will delve deeper into the specifics of cryptocurrencies and DeFi, exploring the intricate details and the profound implications they hold for the future of finance and beyond. Chapter 2, Cryptocurrency Deep Dive, 2.1. Bitcoin, the first cryptocurrency. In 2008, an individual or group under the pseudonym Satoshi Nakamoto published a white paper titled Bitcoin, a peer-to-peer electronic cash system, laying the groundwork for a revolutionary form of digital currency, Bitcoin. Bitcoin emerged as a response to the financial crisis of 2007-2008, proposing a decentralized system that would eliminate the need for intermediaries like banks. It was designed as a peer-to-peer network, where transactions could be securely processed and verified through a distributed ledger known as the blockchain. The creation of the first block, known as the Genesis block, in 2009 marked the launch of the Bitcoin network. Bitcoin offered a fixed supply of 11 million coins, introducing the concept of digital scarcity. Miners, using powerful computers, validate transactions and secure the network by solving complex cryptographic puzzles, a process known as proof of work. For their efforts, miners are rewarded with newly minted Bitcoins. Bitcoin's journey from a niche technological experiment to a recognized asset class has been marked by volatility, regulatory challenges, and intense speculation. Despite this, it has attracted millions of users and has laid the foundation for numerous innovations in the digital financial space. 2.1. Altcoins, Variety and Purpose. Following Bitcoin's success, a myriad of alternative cryptocurrencies, known as altcoins, began to surface. Some sought to improve upon Bitcoin's technology by offering faster transaction times, improved security features, or more efficient consensus mechanisms. Others were created to serve specific niches or introduce new functionalities that Bitcoin did not provide. Ethereum, for example, expanded upon the concept of blockchain technology by incorporating smart contracts, self-executing contracts with the terms directly written into code. This allowed developers to build decentralized applications, dApps, on its blockchain, broadening the scope of possibilities. Each altcoin comes with its own value proposition, economic model, and community. From privacy-focused coins like Monero and Zcash to utility tokens designed to power specific platforms, the world of altcoins is diverse and continually evolving, enriching the cryptocurrency ecosystem and offering investors and users a plethora of choices. 2.3. Tokens versus coins. Understanding the difference. In the cryptocurrency space, the terms coin and token are often used interchangeably, but they represent different concepts. Coins, like Bitcoin and Litecoin, operate on their own blockchain and are primarily used as a medium of exchange or a store of value. Tokens, on the other hand, are built on existing blockchains and serve a variety of purposes. They can represent assets, provide access to services within a specific dApp, or be used in governance models where holders can vote on decisions affecting the platform's future. Ethereum's ERC-10 standard became a popular framework for token creation, leading to a surge in token offerings, each with its unique use cases and features. 2.4. Cryptocurrency wallets, types, and security. A cryptocurrency wallet is a digital tool that allows users to store, send, and receive cryptocurrencies. Wallets contain pairs of private and public keys. The public key can be shared with others to receive funds, while the private key, which is used to sign transactions, is meant to be kept secret. There are several types of wallets, each offering different levels of security and convenience. Hardware wallets, such as Ledger and Trezor, are physical devices that store keys offline, providing robust protection against online hacking attempts. Software wallets can be desktop programs, mobile apps, or web-based, and while they are more convenient for frequent transactions, they are also more vulnerable to cyber threats. Paper wallets are physical documents containing keys and QR codes, eliminating digital risks but susceptible to physical damage or loss. The security of cryptocurrency funds is paramount, and users are encouraged to practice safe storage methods, use strong passwords, enable two-factor authentication, and maintain multiple backups to safeguard their investments. 2.5. Crypto exchanges. Centralized and decentralized platforms. Crypto exchanges are platforms where users can buy, sell, or trade cryptocurrencies. Centralized exchanges, CEXs, like Coinbase and Binance, act as intermediaries, facilitating trades and offering a variety of services, including fiat-to-crypto transactions, advanced trading features, and customer support. They provide ease of use and liquidity, but require users to trust the platform with their funds and personal information. Decentralized exchanges, DEXs, such as Uniswap and SushiSwap, operate without a central authority. Trades occur directly between users, peer-to-peer, through automated smart contracts. DEXs promote the ethos of decentralization and reduce the risk of large-scale hacks that centralized platforms might face. However, they can be less intuitive for newcomers and may lack the same level of customer support and regulatory compliance. 2.6. Initial coin offerings, ICOs, and token sales. An ICO is a fundraising mechanism where new projects sell their underlying tokens in exchange for Bitcoin or Ether. It's akin to an IPO in the stock market, but instead of buying shares, investors purchase tokens before the project launches. ICOs gained immense popularity during the 1017 crypto boom, attracting significant investment and enabling rapid project financing. However, the ICO space has been fraught with risks, including fraudulent schemes and lack of regulatory oversight, leading to substantial losses for uninformed investors. In response, new forms of token sales and fundraising models have emerged, such as security token offerings, STOs, and initial exchange offerings, IEOs, which aim to improve investor protection by adhering to regulatory standards and leveraging the infrastructure of existing exchanges. In conclusion, the cryptocurrency landscape is a dynamic and multifaceted domain, with Bitcoin paving the way for a diverse range of altcoins and tokens. Wallets and exchanges provide the necessary infrastructure for participation, while ICOs represent a novel, albeit risky, method for project funding. As the industry continues to mature, understanding these components becomes essential for anyone looking to navigate the world of digital assets effectively. Chapter 3. The World of DeFi. DeFi, short for Decentralized Finance, challenges the traditional financial system by leveraging blockchain technology to eliminate intermediaries and create a more open, accessible, and transparent financial ecosystem. This chapter delves into the nuts and bolts of DeFi, exploring how it contrasts with traditional finance, its foundational components, the role of various protocols, and innovative concepts such as yield farming and liquidity mining. We will also examine lending, borrowing, decentralized exchanges, DEXs, and the emerging field of DeFi insurance and risk management. 3.1. DeFi versus traditional finance. Traditional finance has been the backbone of the global economy, operating through centralized institutions such as banks, insurance companies, and stock exchanges. These entities act as gatekeepers, controlling access to financial services and maintaining trust through established regulatory frameworks. The system, however, is often criticized for its lack of transparency, inefficiencies, high fees, and barriers to entry for the unbanked and underbanked populations. DeFi emerges as a revolutionary alternative, aiming to reconstruct this architecture on blockchain technology. It operates on the principles of decentralization, eliminating the need for intermediaries by allowing transactions to occur directly between parties. Smart contracts automate the execution of agreements, enhancing transparency and reducing costs. DeFi platforms are typically open source, allowing anyone with an internet connection to participate without the need for traditional credit checks or geographical restrictions. 3.2. Key components of DeFi. The infrastructure of DeFi consists of several key components that form its operational foundation. Smart contracts, self-executing contracts with the terms of the agreement directly written into code. Decentralized applications, dApps, applications that run on a peer-to-peer network of computers rather than a single server. Stablecoins, cryptocurrencies designed to minimize price volatility, often pegged to fiat currencies or commodities. Governance tokens, tokens that give holders the right to participate in decision-making processes of the DeFi protocol. Oracles, services that provide real-world information to smart contracts, enabling them to interact with external data. Each component plays a critical role in ensuring that DeFi applications function seamlessly and securely. 3.3. Understanding DeFi protocols. DeFi protocols are the rules that define the operation of decentralized platforms, often implemented as smart contracts on the blockchain. They enable various financial services, including exchanges, lending, and insurance, without centralized control. Some of the well-known DeFi protocols include Uniswap for decentralized trading, Compound and Aave for lending and borrowing, and MakerDAO for stablecoin issuance and governance. These protocols are permissionless, meaning they are open for anyone to use or build upon. They are also interoperable, allowing for composability, where developers can create new products by combining different DeFi services like money Legos. 3.4. Yield farming and liquidity mining. Yield farming has become a popular way to generate returns within the DeFi space. It involves lending or staking cryptocurrency to receive rewards, often in the form of additional cryptocurrency. Liquidity mining is a subset of yield farming where users provide liquidity to a DeFi protocol and, in return, earn new tokens as well as a portion of the trading fees. These practices have introduced new ways for users to earn passive income on their crypto holdings, but they also come with risks, such as impermanent loss and smart contract vulnerabilities. 3.5. DeFi lending and borrowing. DeFi has revamped the lending and borrowing landscape by enabling permissionless loans without the need for a traditional credit score assessment. Platforms like Aave and Compound allow users to supply digital assets into a pool from which others can borrow. Interest rates are determined algorithmically based on supply and demand. Lenders earn interest while retaining the liquidity of their assets through tokenization, which represents their share in the pool. Borrowers can obtain loans instantly by providing collateral, usually in excess of the loan value to maintain solvency of the protocol. 3.6. Decentralized exchanges, DEXs. DEXs are a cornerstone of DeFi, allowing users to trade cryptocurrencies without an intermediary. Unlike centralized exchanges, DEXs are non-custodial, meaning that users retain control of their private keys and funds throughout the trading process. They rely on smart contracts to facilitate trades directly between users. Liquidity pools are a fundamental aspect of DEX, with protocols like Uniswap utilizing an automated market maker (AMM) model to ensure that trading pairs have sufficient liquidity. Users who provide liquidity to these pools are rewarded with a fraction of the transaction fees and, in some cases, additional tokens. 3.7. DeFi Insurance and Risk Management. As the DeFi ecosystem continues to mature, the importance of risk management and insurance becomes increasingly evident. Protocols like Nexus, Mutual, and Cover Protocol offer decentralized insurance products that protect against smart contract failures, exchange hacks, and other operational risks. DeFi insurance operates on the principle of risk sharing among participants. Policyholders pay a premium to secure coverage, and in the event of a valid claim, the pooled funds are used to compensate the affected parties. DeFi is radically reshaping the financial landscape by providing a permissionless, transparent, and efficient alternative to traditional finance. From the foundational protocols to innovative concepts like yield farming and decentralized insurance, DeFi offers a wealth of opportunities for users to engage with financial services in a decentralized manner. However, with these opportunities come new risks and challenges that must be navigated carefully. As the sector grows, it will continue to test the boundaries of what's possible in the world of finance, potentially leading to a more inclusive and democratized financial system for all. Chapter 4. Cryptocurrency Investing and Trading. 4.1. Fundamentals of Cryptocurrency Investing. Investing in cryptocurrencies can be an exhilarating and, at times, a daunting endeavor. It's a landscape characterized by its high volatility and unpredictability, but also its potential for substantial rewards. The fundamental principle of cryptocurrency investing is not dissimilar to traditional markets: buy low and sell high. However, due to the nascent and decentralized nature of this asset class, there are additional considerations. Investors must thoroughly understand the technology behind these assets, the market sentiment, and the factors that drive price movements. Before diving into the world of crypto investing, one must align their investment with personal financial goals and risk tolerance. Due diligence is paramount. Understanding the project's white paper, the team behind the cryptocurrency, and the problem it aims to solve can provide insights into its potential for long-term success. Diversification is another key strategy, spreading investments across different assets to mitigate risk. 4.2. Analyzing cryptocurrency markets. The analysis of cryptocurrency markets can take two primary forms: fundamental analysis and technical analysis. Fundamental analysis involves evaluating a cryptocurrency's value based on factors such as technology, team development activities, and market adoption. It also includes understanding the macroeconomic factors such as regulation news or technological breakthroughs that could impact the entire industry. Technical analysis, on the other hand, relies on statistical trends and chart patterns. Traders use various indicators such as moving averages, relative strength index, RSI, and Fibonacci retracement levels to predict future market movements. It is also crucial to stay attuned to market sentiment, often gauged through community engagement on social media platforms and news outlets, as it can drive price swings in the short term. 4.3. Trading strategies for cryptocurrencies. There are several trading strategies that investors and traders employ when navigating the cryptocurrency markets. Day trading involves entering and exiting positions within the same trading day, capitalizing on short-term price movements. Swing trading is another strategy that looks to profit from price swings over a period of days or weeks. Position trading is a long-term approach where a trader holds a position for months or years, relying more on fundamental analysis. Scalping is at the other end of the spectrum, where a trader makes a large number of trades within a day to profit from small price gaps. Each strategy requires a different set of skills and risk tolerance levels, and traders often use a combination of them to maximize their potential returns. 4.4. Risk management in crypto trading. Risk management is crucial in the volatile world of cryptocurrency trading. Setting stop-loss orders can limit potential losses if the market moves against a trader's position. Position sizing is also important, ensuring that no single trade can significantly impact the overall portfolio. Diversification is not just about investing in different assets, but also includes diversification of strategies and holding periods. Understanding the correlation between different cryptocurrencies can also aid in risk management. During times of market stress, many cryptocurrencies may move in tandem, reducing the effectiveness of a diversification strategy. It is also important for traders to keep abreast of global economic events and developments within the crypto space that could affect the markets. 4.5. Tax implications and regulations. Crypto investing is not just about market analysis and strategy. It's also essential to understand the tax implications and adhere to the regulations of the jurisdiction in which one operates. Profits from cryptocurrency transactions are typically subject to capital gains tax, and the reporting requirements can be complex. In many countries, regulations are still evolving, and staying compliant requires staying informed about the latest legal developments. Regulations can also impact market dynamics. Announcements of new regulations or the enforcement of existing ones can cause significant market reactions. Investors need to be aware of the legal context surrounding their investments, including anti-money laundering, AML, and Know Your Customer, KYC, policies that exchanges implement. 4.6. Building and managing a crypto portfolio. Constructing a well-balanced crypto portfolio is a dynamic process that involves continuous learning and adaptation. A robust portfolio might include a mix of different cryptocurrencies, including established coins like Bitcoin and Ethereum, along with smaller altcoins and tokens that present higher risk-reward ratios. Active portfolio management is key, which involves regularly assessing the performance of individual assets and the overall portfolio, rebalancing when necessary to maintain alignment with one's investment goals and risk profile. The use of portfolio trackers can greatly aid investors in monitoring their investments in real time. In summary, cryptocurrency investing and trading present a complex but potentially rewarding landscape. It requires a blend of analytical skills, strategic planning, and an understanding of the regulatory environment. By mastering the fundamentals, analyzing market trends, employing solid trading strategies, managing risks effectively, staying compliant with regulations, and meticulously building a portfolio, investors can navigate the crypto markets with greater confidence and efficacy. Chapter 5. Legal and Regulatory Environment. The transformative potential of cryptocurrencies and DeFi, decentralized finance, has not only disrupted the financial industry but has also prompted a global discussion on the legal and regulatory aspects of digital assets. In this chapter, we delve into the intricate landscape of regulations that govern these innovations, the compliance hurdles faced by market participants, and the ongoing efforts to shape the future of digital finance through advocacy and lobbying. 5.1. Regulatory landscape for cryptocurrencies and DeFi. The regulatory landscape for cryptocurrencies and DeFi is as dynamic as the technologies themselves. Countries around the world have taken varied approaches, ranging from outright bans to strategic embracement, with most falling somewhere in between. In jurisdictions like the United States, regulatory bodies such as the Securities and Exchange Commission, SEC, the Commodity Futures Trading Commission, CFTC, and the Financial Crimes Enforcement Network, FinCEN, have been actively shaping policies to ensure investor protection, market integrity, and compliance with existing financial laws. In the European Union, the Markets in Crypto Assets, MiCA, framework is being developed to provide a harmonized regulatory environment for crypto assets. Similarly, in Asia, countries like Japan have recognized Bitcoin and other cryptocurrencies as legal property, while maintaining a strict licensing regime for crypto exchanges. The varied regulatory responses have created a patchwork of compliance requirements, influencing where businesses choose to operate and how they innovate within the space. 5.2. Anti-Money Laundering, AML, and Know Your Customer, KYC, regulations. AML and KYC regulations are critical components of the financial regulatory framework designed to prevent illegal activities such as money laundering and terrorism financing. In the context of cryptocurrencies and DeFi, these regulations pose significant challenges due to the pseudonymous nature of blockchain transactions. Regulatory bodies worldwide have been extending AML and KYC requirements to crypto exchanges and wallet providers to mitigate these risks. The Financial Action Task Force, FATF, an intergovernmental organization, has issued guidance to its member states, recommending that virtual asset service providers, VASPs, adhere to AML and KYC standards akin to traditional financial institutions. These guidelines include the controversial travel rule, which mandates that VASPs collect and share personal information during transactions above a certain threshold. Compliance with these regulations is a complex task for DeFi projects, especially those striving to maintain decentralization and user privacy. 5.3. Compliance and legal challenges in DeFi. DeFi's promise of open financial systems is often at odds with regulatory frameworks designed for centralized entities. The decentralized nature of these platforms, where governance is often in the hands of a distributed community rather than a central authority, complicates regulatory enforcement. Furthermore, the rapid innovation in DeFi services often outpaces the development of new regulations, leading to ambiguous or outdated legal guidance. Smart contracts, which execute transactions automatically on the blockchain, further complicate compliance as they cannot be easily altered once deployed. This raises questions about liability and consumer protection when things go wrong. Additionally, the cross-border nature of DeFi platforms means that they may be subject to a multitude of conflicting regulations, making compliance a daunting task for DeFi developers and users alike. 5.4. Global regulatory perspectives and developments. As countries grapple with the rise of cryptocurrencies and DeFi, global regulatory perspectives and developments continue to evolve. Some nations, like El Salvador, have taken bold steps by adopting Bitcoin as legal tender, while others remain cautious, enacting strict regulatory measures to curb the adoption of digital assets. International cooperation is seen as vital for developing a cohesive regulatory approach to DeFi. The G10, along with international bodies like the FATF and the International Monetary Fund, IMF, has been actively discussing and researching the implications of digital finance and the need for a balanced approach that fosters innovation while mitigating risks. 5.5. Advocacy and lobbying for cryptocurrency adoption. Advocacy and lobbying efforts play a crucial role in shaping the regulatory environment for cryptocurrencies and DeFi. Industry participants, from startups to established players, engage with policymakers to educate them on the benefits and challenges of digital finance. Advocacy groups and trade associations, such as the Blockchain Association and the Chamber of Digital Commerce, work to represent the interests of the industry and promote policies that support the responsible growth of the sector. Lobbying efforts have led to some legislative successes, such as the introduction of bills aimed at providing clarity on the tax treatment of cryptocurrencies or the legal status of digital tokens. As the industry grows, its collective voice becomes increasingly important in influencing policy decisions that will impact the future of finance. In conclusion, the legal and regulatory environment for cryptocurrencies and DeFi is complex and ever-evolving. As these technologies continue to mature, regulatory clarity will be crucial for fostering innovation, ensuring consumer protection, and maintaining the integrity of financial markets. It is through a collaborative effort between regulators, industry participants, and the broader community that the full potential of cryptocurrencies and DeFi can be realized, creating a more inclusive and efficient financial system. With this comprehensive understanding of the regulatory landscape, we can appreciate the delicate balance between innovation and regulation. The next chapters will explore the practical aspects of engaging with cryptocurrencies and DeFi, ensuring that readers are well equipped to navigate this exciting new frontier. Chapter 6. Risks and Challenges in Cryptocurrency and DeFi. 6.1. Security, Risks and Precautions. In the brave new world of digital finance, security is paramount. Cryptocurrencies and DeFi platforms are built on complex technology, and they operate in a space that is attractive to cybercriminals due to the high value and sometimes pseudonymous nature of transactions. The security risks range from exchange hacks and phishing scams to the theft of private keys that can result in the loss of funds. One of the core security precautions is the proper management of private keys, cryptographic strings of characters that allow users to access their cryptocurrency holdings. It is essential to use hardware wallets or secure software options for private key storage. In addition, users should be vigilant in protecting their personal information and wary of phishing attempts, which are ever more sophisticated. Furthermore, participants in the crypto ecosystem must ensure they are using reputable platforms that implement strong security measures, including two-factor authentication, U1FA, regular security audits, and insurance policies for the protection of user funds. 6.2. Smart Contract Vulnerabilities. Smart contracts, the self-executing contracts with the terms of the agreement directly written into code, are a foundational component of DeFi. They automatically enforce and execute the terms of a contract without the need for intermediaries. However, as with any code, smart contracts are vulnerable to bugs and security flaws. These vulnerabilities can be exploited by attackers, leading to the loss or theft of massive amounts of cryptocurrency. The infamous DAO attack in 1016 is a prime example, where attackers exploited a vulnerability in a smart contract to siphon off a third of the DAO's funds. To mitigate such risks, it is crucial for DeFi projects to conduct thorough smart contract audits by reputable security firms before launching any new protocol or service. 6.3. Market volatility and speculative trading. Cryptocurrency markets are known for their extreme volatility, with the prices of digital assets capable of making double-digit percentage moves within a single day. This volatility is fueled by a variety of factors, including regulatory news, technological advancements, market sentiment, and speculative trading. For investors and traders, this volatility can be a double-edged sword, offering the potential for high returns but also presenting significant risk of loss. Market participants should exercise prudent risk management strategies, such as diversification and setting stop-loss orders to protect themselves against market downturns. Moreover, the speculative nature of cryptocurrency trading often leads to bubble-like phenomena, highlighting the importance of understanding market cycles and investor psychology. 6.4. Scalability issues and network congestion. Scalability is a significant challenge in the blockchain space, particularly for popular networks like Ethereum, which hosts a vast number of DeFi applications. As the number of transactions on a blockchain grows, the network can become congested, leading to slower transaction times and higher fees. This not only degrades user experience, but can also limit the adoption and growth of DeFi services. In response, developers are working on various solutions, including Layer 2 scaling solutions like rollups, side chains, and even entirely new blockchain protocols designed for better scalability. As the technology matures, it is expected that these scalability issues will be mitigated, enabling blockchains to handle a larger volume of transactions efficiently. 6.5. Ethical and social implications of cryptocurrencies. The advent of cryptocurrencies and DeFi has also raised ethical and social questions. For instance, the energy consumption of proof-of-work cryptocurrencies like Bitcoin has drawn criticism due to its environmental impact. There is also the issue of wealth concentration, where the early adopters of cryptocurrencies could potentially amass significant wealth, contributing to wider societal inequality. Additionally, the pseudo-anonymous nature of cryptocurrency transactions has raised concerns about their potential use in illicit activities. While blockchain technology offers greater transparency compared to traditional finance, in some respects, the pseudonymity can also make it difficult to trace the flow of funds associated with criminal activity. Cryptocurrencies and DeFi represent a paradigm shift in the financial industry, offering numerous benefits, including increased accessibility and efficiency. However, they also come with a host of risks and challenges that must be carefully navigated. As the industry evolves, it is crucial for participants to remain informed and cautious, adopting best practices to safeguard their investments and contribute to the development of a responsible digital finance ecosystem. Chapter 7. Emerging Trends and Future of Cryptocurrency and DeFi. As we stand at the precipice of a financial revolution, the realms of cryptocurrency and decentralized finance, DeFi, continue to evolve at a breakneck pace. This chapter delves into the future-shaping trends and innovations that are poised to redefine the landscape of digital finance. 7.1. Advances in blockchain technology. The underpinning technology of cryptocurrencies, blockchain, is continually undergoing refinement and enhancement. One of the most significant advances is the shift from energy-intensive consensus mechanisms like proof-of-work, POW, to more sustainable alternatives such as proof-of-stake, POS. Ethereum's transition to Ethereum 1.0, often referred to as Serenity, exemplifies this shift. The promise of POS lies not only in its environmental benefits, but also in the potential for greater scalability and faster transaction processing times. Layer 1 scaling solutions are another frontier in blockchain evolution. Technologies such as state channels, side chains, and roll-ups are being developed to alleviate the bottlenecks of network congestion and high transaction fees. These solutions enable off-chain transaction processing, which can then be settled on the main blockchain, thereby enhancing throughput and efficiency. Interoperability between different blockchain networks is another area where significant strides are being made. Projects like Polkadot and Cosmos are working on creating ecosystems where information and value can seamlessly transfer across disparate chains. This Internet of Blockchains approach could be the key to widespread adoption, enabling diverse blockchains to communicate and build a more cohesive digital economy. 7.2. The growth of non-fungible tokens, NFTs. Non-fungible tokens, NFTs, have emerged as a cultural and economic phenomenon, extending blockchain's reach beyond finance and into art, entertainment, and media. NFTs represent unique digital assets, such as artwork, collectibles, and even real estate in virtual worlds, secured by blockchain technology. This uniqueness has given rise to a new asset class that has caught the imagination of creators and collectors alike. The potential applications for NFTs are vast. In the world of gaming, they enable players to truly own in-game items and potentially transfer them across different gaming platforms. In art, they provide a means for digital artists to monetize their work in ways that were previously impossible, ensuring authenticity and provenance. As the ecosystem matures, we can expect NFTs to disrupt other sectors, including intellectual property rights management and the tokenization of physical assets. 7.3. Integration of DeFi with traditional finance. DeFi has grown exponentially, yet it still exists largely on the fringes of the broader financial system. However, the integration of DeFi protocols with traditional finance, TradFi, is on the horizon. This convergence could democratize access to financial services and create more open, efficient, and transparent systems. Hybrid financial products that blend DeFi's innovation with TradFi's regulatory compliance and established trust could attract institutional investors and mainstream consumers. This integration could see DeFi protocols powering the back end of fintech applications, while traditional financial institutions could adopt blockchain technology to streamline operations and reduce costs. Additionally, the tokenization of traditional assets like stocks and bonds onto DeFi platforms could transform how we think about and trade securities. 7.4. Central Bank Digital Currencies, CBDCs. The concept of central bank digital currencies, CBDCs, has gained traction as central banks worldwide explore the idea of issuing their own digital currencies. CBDCs represent a digital form of a country's fiat currency, maintained on a blockchain, which could offer the benefits of digital currency while being backed and regulated by a central authority. The implications of CBDCs are profound. They could enhance the efficiency of payment systems, reduce settlement times, and lower transaction costs. Moreover, CBDCs could provide central banks with innovative tools for monetary policy implementation. However, their introduction also raises questions about privacy, security, and the impact on commercial banks. 7.5. Predictions and forecasts for the next decade. Looking ahead, the cryptocurrency and DeFi sectors are expected to undergo continued growth and maturation. Institutional adoption is likely to increase, bringing more stability and liquidity to the markets. We may see the emergence of a universal digital identity system anchored on blockchain technology, which could serve as a gateway to global financial services. Advancements in artificial intelligence, AI, and machine learning, ML, could be integrated with blockchain to create more intelligent and adaptive financial services. Additionally, the rise of quantum computing presents both a risk, in terms of potential cryptographic vulnerabilities, and an opportunity for the development of quantum-resistant encryption methods. Regulatory clarity will play a pivotal role in shaping the future of cryptocurrency and DeFi. As governments and regulatory bodies come to grips with the digital asset space, their approach will either stifle innovation or foster an environment where these new financial systems can thrive. In conclusion, while the trajectory for cryptocurrency and DeFi is fraught with uncertainty, the sector's potential to transform the financial landscape is undeniable. The coming decade will be critical in determining whether these digital assets will be relegated to the niche corners of finance or take center stage in the global economy. As we continue to witness groundbreaking developments, one thing remains clear: the journey of cryptocurrency and DeFi is only just beginning. Chapter 8. Practical Guide to Getting Started with Cryptocurrency and DeFi. 81. Setting up a cryptocurrency wallet. Entering the world of cryptocurrencies begins with the essential step of setting up a digital wallet. A cryptocurrency wallet is a software program that allows you to store, send, and receive digital currencies. Wallets can be broken down into two categories: hot wallets and cold wallets. Hot wallets are connected to the internet and provide convenience for quick transactions. They come in various forms, such as desktop apps, mobile apps, and web wallets. To set up a hot wallet, you choose a reputable provider, download the software or app, and create an account. It's crucial to follow best security practices like using a strong, unique password and enabling two-factor authentication, 1FA. Cold wallets, on the other hand, are offline storage options. They include hardware wallets like USB devices and paper wallets. Cold wallets are more secure as they are immune to online hacking attempts. Setting up a hardware wallet involves purchasing the device, initializing it, and transferring your cryptocurrencies to it. Remember to store it in a safe location and never share your private key or recovery phrase with anyone. Both wallet types generate a private key, a complex form of cryptography that allows a user to access their currency. The rule of thumb is simple. If you lose your private key, you lose your currency. Therefore, backing up your wallet and keeping your private key in a secure location is vital. 8.2 Safely buying and storing cryptocurrencies. Buying cryptocurrency safely requires doing due diligence on various exchanges to find a trustworthy platform. Look for exchanges with strong security measures, positive user reviews, and compliance with relevant regulations. Upon deciding on an exchange, you'll need to register, complete any necessary KYC, know your customer processes, and then you're set to buy cryptocurrencies through various payment methods like bank transfers, credit cards, or other cryptocurrencies. Once purchased, storing your cryptocurrencies securely is the next step. As mentioned earlier, the choice between hot and cold wallets depends on the balance between convenience and security you're looking for. Regardless of the type, always ensure that your wallet is backed up and that all security features like encryption and 1FA are in use. 8.3 Using DeFi platforms, a step-by-step approach. DeFi platforms are the cornerstone of decentralized finance, offering services ranging from lending and borrowing to yield farming. To start using a DeFi platform, you'll need a wallet compatible with the platform you choose. The most common are Ethereum-based wallets like MetaMask, as many DeFi applications run on the Ethereum blockchain. Once your wallet is ready and funded with some cryptocurrency, you can connect it to the DeFi platform. This process usually involves visiting the platform's website and clicking a Connect Wallet button. Always ensure you're on the legitimate site to avoid phishing scams. After connecting, you can explore the platform's services. If you're interested in lending, for instance, you'd select a lending pool, deposit your funds, and start earning interest. The process for borrowing is similar, but you'll need to provide collateral. Each platform has its user interface, but the fundamentals of interacting with them are generally the same. 8.4. Understanding and interacting with smart contracts. Smart contracts are self-executing contracts with the terms directly written into code. They run on the blockchain and automatically enforce and execute agreements without intermediaries. To interact with a smart contract, you typically use a decentralized application, DAPP, that provides a user-friendly interface for the underlying smart contract. Before you interact with a smart contract, it's essential to understand its functions and the potential risks. Reading the contract's documentation and reviews from other users can provide insight into its reliability and performance. When you decide to proceed, you'll interact with the smart contract through the DApp by confirming transactions in your wallet. Each interaction, whether it's staking tokens, participating in a DAO, or trading on a decentralized exchange, will require a transaction fee, gas fee, to be completed. 8.5 Participating in DAOs, decentralized autonomous organizations. DAOs are an exciting aspect of DeFi, offering a community-led governance model where decisions are made by token holders. Participation in a DAO starts with acquiring governance tokens, which grant voting rights. These tokens can be bought on exchanges or earned through participation in the DAO's activities. Once you have governance tokens, you can participate in the decision-making process. This typically involves voting on proposals related to the development and management of the DAO. Voting is done through the DAO's platform, where you'll connect your wallet and cast your vote according to the number of tokens you hold. Participating in a DAO is a powerful way to have a direct say in the evolution of a DeFi project. It's a responsibility that should be taken seriously, as your decisions can impact the project's direction and success. In conclusion, getting started with cryptocurrency and DeFi can seem daunting, but by following this practical guide, you can embark on this journey with confidence. Always prioritize security, do your research, and remember that the space is constantly evolving, offering new opportunities and learning experiences. Whether you're setting up your first wallet, engaging with smart contracts, or participating in a DAO, the future of finance is open to everyone willing to dive in. Chapter 9. Building a Career in Cryptocurrency and DeFi. The cryptocurrency and DeFi sectors have not only revolutionized finance, but have also created a burgeoning job market with unique career opportunities. The decentralized nature of these technologies means that they cut across traditional job categories and require a blend of skills ranging from finance and economics to computer science and cryptography. 9.1. Career Paths and Opportunities. The landscape of career opportunities within cryptocurrency and DeFi is as diverse as it is dynamic. Jobs in this field range from technical roles such as blockchain developers and smart contract engineers to analytical roles like crypto market analysts. There are also more specialized roles like tokenomics strategists who design the economic models behind tokens and community managers who foster engagement and growth within a project's user base. One of the most sought-after positions is that of a blockchain developer, responsible for creating and implementing solutions on blockchain platforms. These developers are the architects of decentralized applications, DApps, and must be proficient in coding languages such as Solidity for Ethereum-based applications. Compliance officers are also in high demand. With the evolving regulatory landscape, companies need experts who can navigate the complex legal frameworks and ensure that projects comply with anti-money laundering, AML, and Know Your Customer, OKYC, policies. For those with a penchant for finance, positions such as DeFi analysts and traders provide an opportunity to delve into market trends and trading strategies. These professionals analyze tokens, predict market movements, and manage portfolios. The rise of decentralized autonomous organizations, DAOs, has also created roles for those interested in governance and community-led initiatives. DAO consultants and strategists help shape the decision-making processes that guide these organizations. 9.2. Skills and education required for a career in DeFi. The interdisciplinary nature of DeFi means that there is no one-size-fits-all educational pathway. However, a strong foundation in computer science or finance is beneficial. For technical roles, an understanding of blockchain fundamentals, data structures, algorithms, and cryptography is essential. Programming skills in languages such as JavaScript, Python, Go, or Rust, along with blockchain-specific languages like Solidity, are also crucial. For non-technical roles, a background in finance or economics can be advantageous, particularly if coupled with a robust understanding of the cryptocurrency market dynamics and financial instruments in DeFi. However, given the novelty of the field, formal education is often supplemented with self-learning. Online courses, workshops, and webinars are valuable resources for staying current with the latest technologies and trends. Soft skills are equally important. Problem-solving, adaptability, and the ability to work in a rapidly changing environment are key. Given the community-driven aspect of many projects, strong communication and collaboration skills are also highly valued. 9.3. Networking and community involvement. Networking is essential in the fast-paced world of cryptocurrency and DeFi. Being an active participant in online forums, attending meetups, and joining blockchain and DeFi groups can lead to job opportunities and collaborations. Platforms such as Discord, Reddit, and Twitter are hubs for the crypto community. Engaging in these spaces can provide valuable insights and connections. Contributing to open-source projects is another way to get involved and get noticed. Many DeFi projects are open source, allowing developers to contribute code, find bugs, or suggest improvements. This not only helps build a reputation within the community, but also demonstrates expertise to potential employers. 9.4. Starting your own project or business in the crypto space. For the entrepreneurial-minded, the DeFi space offers fertile ground for innovation. Starting a project requires a clear understanding of a problem that can be addressed with blockchain technology. It also requires assembling a team with the necessary skills to bring the vision to life. Fundraising through means such as initial coin offerings, ICOs, initial exchange offerings, IEOs, or venture capital are avenues to secure the capital required to start and scale a project. However, this process is fraught with regulatory and strategic challenges, and a clear plan is essential for success. Building a user-friendly interface, ensuring the security of the platform, and establishing trust within the community are critical steps for any project. Marketing and user acquisition strategies must also be in place to attract and retain users. 9.5. Case studies of successful careers and enterprises in DeFi. The landscape of DeFi is dotted with success stories. Take, for instance, Andre Cronje, known for his work on Finance, a platform that optimizes yields for its users. Cronje's background as a developer and his contributions to DeFi have made him a prominent figure in the space. Another example is Hayden Adams, the creator of Uniswap, one of the most successful decentralized exchanges. Adams's background in mechanical engineering and his self-taught coding skills led him to develop Uniswap, significantly impacting the DeFi ecosystem. On the enterprise side, Aave has emerged as a leading lending protocol in DeFi. Founded by Stani Kulachov, Aave has introduced innovations such as flash loans and has consistently been at the forefront of the DeFi lending market. These cases illustrate that success in DeFi often comes from a combination of technical skills, a deep understanding of the market, and the ability to innovate within the space. They also highlight the importance of responding to the community's needs and maintaining transparency and security in operations. The future of careers in cryptocurrency and DeFi is promising. As technologies evolve and the market matures, the demand for skilled professionals will continue to grow. Whether through technical development, financial analysis, or entrepreneurial ventures, opportunities abound for those willing to learn and adapt in this dynamic and exciting field. Chapter 10. Conclusion. 10.1. Recap of key points covered in the book. As we reach the conclusion of our exploration into the dynamic realms of cryptocurrency and decentralized finance, DeFi, it is fitting that we take a moment to reflect on the key points that have been covered throughout this book. We began our journey with an introduction to what cryptocurrency is, delving into the history and evolution of this revolutionary form of digital currency that has been reshaping the way we think about money since the creation of Bitcoin in 2009. The basics of blockchain technology, the backbone of cryptocurrency, were discussed, highlighting how this distributed ledger technology ensures security and transparency in transactions. We then introduced the concept of DeFi, a paradigm shift in financial services that leverages blockchain technology to operate without the need for traditional financial intermediaries. The importance of cryptocurrency and DeFi in today's economy was underscored, emphasizing their potential to promote financial inclusion and innovation. The book's structure was outlined, setting the stage for a comprehensive understanding of this complex subject matter. In the following chapter, we dived deeper into the concept of decentralization, a cornerstone of blockchain technology. We examined how blockchain works from a technical perspective, the different types of blockchain, such as public, private, and consortium, and the role of smart contracts in DeFi. Blockchain security was addressed through discussions on cryptography, consensus mechanisms, and hash functions. Real-world case studies illustrated the impact of blockchain on various sectors, from finance to supply chain management. The third chapter offered a deep dive into the world of cryptocurrency, starting with Bitcoin, the progenitor of all cryptocurrencies. We discussed altcoins, the various types and purposes they serve, and the distinction between tokens and coins. The intricacies of cryptocurrency wallets and exchanges, both centralized and decentralized, were explored, as well as the phenomena of initial coin offerings, ICOs, and token sales. The subsequent chapter was dedicated entirely to DeFi, where we compared it to traditional finance and outlined its key components. We demystified DeFi protocols, explained the concepts of yield farming and liquidity mining, and addressed lending, borrowing, and decentralized exchanges, DEXs. DeFi insurance and risk management were also covered, highlighting the innovative ways in which DeFi is seeking to mitigate risks for participants. We ventured into the realm of cryptocurrency investing and trading, providing readers with the fundamentals of investing, analysis of cryptocurrency markets, and various trading strategies. The importance of risk management in crypto trading was stressed, as were the tax implications and regulations surrounding the crypto space. Building and managing a crypto portfolio was also discussed, equipping readers with valuable insights to navigate the investment landscape. The legal and regulatory environment chapter delved into the regulations governing cryptocurrencies and DeFi, including AML and KYC requirements. Compliance and legal challenges were addressed, along with global regulatory perspectives and the advocacy work being done to promote cryptocurrency adoption. We addressed the risks and challenges associated with cryptocurrency and DeFi, focusing on security risks, smart contract vulnerabilities, market volatility, scalability issues, and the ethical and social implications of this new technology. Emerging trends and the future of cryptocurrency and DeFi were examined in another chapter, which looked at advances in blockchain technology, the rise of non-fungible tokens, NFTs, the potential for integration with traditional finance, and the advent of central bank digital currencies, CBDCs. Predictions and forecasts for the next decade provided a glimpse into what the future may hold for these technologies. A practical guide to getting started with cryptocurrency and DeFi was provided, offering step-by-step instructions for setting up a wallet, buying and storing cryptocurrencies safely, using DeFi platforms, understanding smart contracts, and participating in DAOs. The penultimate chapter focused on building a career in the cryptocurrency and DeFi sectors, detailing potential career paths, the skills and education required, the importance of networking and community involvement, and insights into starting a project or business in the crypto space. Case studies of successful careers and enterprises in DeFi served as inspiration for aspiring professionals. 10.2. The potential and limitations of cryptocurrencies and DeFi. The potential of cryptocurrencies and DeFi is vast and multifaceted, promising a future where financial transactions are more inclusive, efficient, and secure. The democratization of finance through these technologies offers opportunities for individuals and businesses around the globe to access financial services that were previously out of reach. The innovation and competition spurred by cryptocurrency and DeFi could lead to lower costs, improved services, and new business models that challenge the status quo of the financial industry. However, this potential comes with its limitations and challenges. Regulatory uncertainty, the scalability of blockchain networks, security concerns, and the environmental impact of some cryptocurrency mining practices are significant hurdles that need to be addressed. The volatile nature of the crypto markets introduces risks for investors, and the nascent state of DeFi protocols means that the ecosystem is still prone to technical vulnerabilities and exploits. Additionally, there is a steep learning curve for individuals to understand and engage with these technologies, safely and effectively. 10.3 Final thoughts on the future of digital finance. The future of digital finance, shaped by cryptocurrency and DeFi, is likely to be one of continuous evolution and transformation. As technology advances and society becomes increasingly digitized, the integration of these financial tools into everyday life seems inevitable. The principles of decentralization, transparency, and immutability that underpin these technologies have the potential to create a more equitable financial system. The adoption of cryptocurrencies and DeFi will continue to be influenced by technological breakthroughs, user education, regulatory developments, and the overall global economic climate. While it is impossible to predict the exact trajectory of these innovations, it is clear that they will play a significant role in the future of finance. 10.4 Call to action for readers and industry participants. As we conclude this book, we call upon readers and industry participants to engage with the world of cryptocurrency and DeFi actively. Education and informed decision-making are critical in navigating this space. We encourage readers to continue learning, experimenting, and contributing to the development of these technologies. For regulators and policymakers, it is essential to collaborate with industry experts to create a balanced regulatory framework that promotes innovation while protecting consumers. Developers and entrepreneurs are urged to prioritize security, user experience, and ethical considerations in their projects. Investors and traders should approach the market with caution, armed with research and sound risk management practices. Together, through collective effort and a shared vision for the future, we can harness the transformative power of cryptocurrency and DeFi to create a more inclusive and efficient financial system for all. As we close this chapter and the book, we hope that you, the reader, are now equipped with a broad understanding of cryptocurrency and DeFi, as well as the tools and knowledge necessary to partake in this exciting and evolving landscape. The revolution in digital finance is just beginning, and the opportunity to be a part of it is open to everyone. Chapter 11. Appendices. 11.1. Glossary of cryptocurrency and DeFi terms. In the rapidly evolving world of cryptocurrency and DeFi, it's easy to get overwhelmed by the specialized vocabulary. This glossary provides concise definitions for common terms you'll encounter throughout this book and in the wider crypto conversation. Altcoin. Any cryptocurrency other than Bitcoin, often with different features and protocols. Blockchain, a distributed ledger technology that maintains a secure and decentralized record of transactions. Consensus mechanism, a system used to achieve agreement on a single data value among distributed processes or systems. In blockchain, mechanisms like proof of work, POW, and proof of stake, POS, are used. Cryptography, the practice and study of secure communication techniques that allow only the sender and intended recipient of a message to view its contents. Decentralized Autonomous Organization, DAO. An organization represented by rules encoded as a computer program that is transparent, controlled by organization members, and not influenced by a central government. Decentralized Exchange, DX. An online exchange that operates without a central authority, where users can trade cryptocurrencies directly with one another. Decentralized Finance, DeFi. Financial services that are provided through a decentralized platform rather than through a centralized authority. Ethereum, a decentralized platform that runs smart contracts, applications that run exactly as programmed without any possibility of downtime, fraud, or third-party interference. Fiat, government-issued currency that is not backed by a physical commodity like gold or silver. Gas, a unit that measures the amount of computational effort required to execute operations on the Ethereum network. Hash function, a function that converts an input, or message, into a fixed-size string of bytes, which typically appears random. Initial coin offering, ICO, a fundraising mechanism in which new projects sell their underlying crypto tokens in exchange for Bitcoin and Ether. Liquidity mining, a network participation strategy in which users provide capital to a protocol in exchange for tokens. Non-fungible token, NFT, a type of cryptographic token which represents something unique. NFTs are not mutually interchangeable. Private key, a secret piece of data that proves your right to spend bitcoins from a specific wallet through a cryptographic signature. Public key, a piece of data derived from a private key, which can be safely shared and is used to identify a wallet. Smart contract, a self-executing contract with the terms of the agreement between buyer and seller being directly written into lines of code. Token, a digital asset issued on a blockchain, often to represent assets or utility. Wallet, a digital or physical medium, device, program, or service which stores the public and/or private keys for cryptocurrency transactions. 11.1. Resource directory for further learning. To continue your journey into the world of cryptocurrency and DeFi, consult the following resources for in-depth knowledge, up-to-date news, and community engagement. Online courses. Platforms like Coursera, edX, and Udemy offer courses ranging from beginner to advanced levels on blockchain technology and cryptocurrency. Books. Mastering Bitcoin by Andreas M. Antonopoulos provides a technical guide to understanding Bitcoin. The Age of Cryptocurrency by Paul Vigna and Michael J. Casey offers a comprehensive overview of how Bitcoin and digital money are challenging the global economic order. Websites. CoinDesk, Cointelegraph, and CryptoSlate are popular for crypto news and analysis. The Ethereum Foundation's website is a gateway to understanding Ethereum and the broader world of DeFi. Forums. Bitcoin Talk and Reddit have vibrant communities discussing all things related to cryptocurrency. Subreddits like r cryptocurrency and r ETH Finance are good starting points. Podcasts. Unchained by Laura Shin and The Pomp Podcast by Anthony Pompliano provide interviews and insights from industry leaders. 11.2. List of influential people and projects in the cryptocurrency space. The cryptocurrency and DeFi ecosystem is driven by innovative thinkers and groundbreaking projects. Here are a few names and initiatives that have made significant impacts. Vitalik Buterin, co-founder of Ethereum and one of the most influential figures in the blockchain space. Satoshi Nakamoto, the pseudonymous person or group of people who developed Bitcoin. DeFi projects. MakerDAO, Compound, and Aave are pioneers in the DeFi lending space, while Uniswap and SushiSwap lead in decentralized exchange, DEX, services. Charles Hoskinson, a co-founder of Ethereum and later the creator of Cardano, another blockchain platform with a strong academic foundation. 11.4. Frequently asked questions, FAQs, about cryptocurrency and DeFi. As a final appendix, we've compiled a list of FAQs to clear up common misunderstandings and provide quick answers to recurring questions about cryptocurrency and DeFi. Q. Can cryptocurrencies be converted into regular money? A. Yes, cryptocurrencies can be exchanged for fiat currencies through online exchanges, peer-to-peer transactions, or Bitcoin ATMs. Q. Are DeFi platforms regulated? A. DeFi platforms operate with varying degrees of regulation, often depending on the jurisdiction they are in. Many strive for a decentralized governance model that minimizes central control. Q. Is it safe to invest in cryptocurrencies? A. Like any investment, there are risks involved. The volatility of cryptocurrency markets can lead to significant gains or losses. It's essential to do thorough research and consider risk management strategies. Q. How do I avoid scams in cryptocurrency? A. Be cautious with your investments. Thoroughly research projects before investing, and keep your private keys secure. Avoid offers that seem too good to be true, and use reputable exchanges and wallets. Q. What happens if I lose my private keys? A. Losing your private keys typically means losing access to your cryptocurrency. It's crucial to keep backups in a secure location. This comprehensive appendix is designed to support your knowledge and understanding of the complex world of cryptocurrency and DeFi, equipping you with the tools and resources needed to navigate this dynamic and exciting field. Chapter 12. References. 12.1. Academic articles and white papers. The field of cryptocurrency and decentralized finance, DeFi, is not only built on technological innovation, but also on a rich body of academic research and insightful white papers. These documents delve into the intricacies of blockchain technology, providing detailed analyses and conceptual frameworks that bolster the legitimacy and understanding of cryptocurrencies. Pivotal to the birth of Bitcoin and the subsequent proliferation of cryptocurrencies was Satoshi Nakamoto's seminal 1008 white paper, Bitcoin, a peer-to-peer electronic cash system. This foundational paper introduced the concept of a decentralized currency, underpinned by a proof-of-work consensus mechanism, setting the stage for a revolution in digital finance. Another significant white paper is Ethereum's description, authored by Vitalik Buterin. It laid the groundwork for a blockchain platform with smart contract functionality, which has become the cornerstone for DeFi applications. Ethereum's capacity to execute code on the blockchain has enabled a vast array of financial services to operate in a decentralized and transparent manner. In the academic realm, the article The Economics of Cryptocurrencies, Bitcoin and Beyond by Jonathan Chu and Thorsten V. Köppel provides a thorough economic analysis of the mechanisms governing cryptocurrencies and their potential impact on the financial system. Furthermore, the research paper Decentralized Finance on Blockchain and Smart Contract-Based Financial Markets by Fabian Schaar is a comprehensive overview of DeFi, exploring its implications for financial market infrastructures and the broader economy. These academic articles and white papers are not only pivotal for understanding the theoretical underpinnings of cryptocurrencies and DeFi, but also act as a guide for developers, entrepreneurs, and regulators in shaping the future of this domain. 12.1. Books and educational material. Books offer extensive insights into the world of cryptocurrency and DeFi, providing context, history, and forward-looking perspectives. Mastering Bitcoin by Andreas M. Antonopoulos is a technical guide that explains the technology behind Bitcoin and how to use it effectively. Meanwhile, The Age of Cryptocurrency by Paul Vigna and Michael J. Casey offers a journalistic account of how Bitcoin and digital money are challenging the global economic order. For those interested in the broader implications of blockchain technology, Blockchain Revolution by Don Tapscott and Alex Tapscott provides a deep dive into how the blockchain could transform not just finance, but numerous other industries. Educational materials also come in the form of online courses and workshops. Institutions like MIT, Stanford, and Coursera offer courses ranging from introductory blockchain technologies to advanced cryptography, often led by industry experts and academics at the forefront of blockchain research. 12.2. Websites, blogs, and online forums. The dynamic nature of cryptocurrency and DeFi means that keeping up to date with the latest developments is crucial. Websites like CoinDesk, Cointelegraph, and The Block are essential for the latest news, while blogs like Vitalik Buterin's provide thought leadership and deep insights from one of the leading minds in the industry. Online forums such as Bitcoin Talk and Reddit's R Cryptocurrency and R Ethereum serve as lively platforms for discussion, troubleshooting, and the exchange of ideas among enthusiasts and professionals alike. 12.4. Government and regulatory publications. Regulatory bodies around the world have been publishing guidelines and frameworks to address the rise of cryptocurrencies and DeFi. The Financial Action Task Force, FATF, has issued guidance on a risk-based approach to virtual assets and virtual asset service providers. The U.S. Securities and Exchange Commission, SEC, offers publications that provide clarity on how existing securities laws apply to digital assets. The Office of the Comptroller of the Currency, OCC, has issued interpretive letters that outline how traditional banking institutions can interact with cryptocurrencies and participate in blockchain networks. Furthermore, the European Union has been working on the markets in crypto assets, MiCA regulation, aiming to create a comprehensive regulatory framework for digital assets within the EU. These government and regulatory publications not only inform practitioners of the current legal landscape, but also indicate the direction of future legislation and its potential impact on the market. In conclusion, the reference materials listed in this chapter are an invaluable resource for anyone seeking to understand, participate in, or influence the evolving domain of cryptocurrency and DeFi. They provide the necessary knowledge base to navigate this complex field and contribute to its ongoing development.